Welcome back. The September Consumer Price Index out in just a few minutes. We are 8 minutes away. We are expecting a month-over-month increase of 0.2%, year-over-year increase of 8.1%. Joining us right now to break it all down is Georgia Congressman, House Energy and Commerce Committee member, and House Budget Committee member Earl Buddy Carter. Crossmark Chief Investment Officer Bob Dahl is here. Former White House Council of Economic Advisors Acting Chairman and University of Chicago economist Tomas Philipson is here. And joining the conversation, of course, all morning long is Dagan McDowell, Mark Tepper, and Todd Pyro. Great to see everybody this morning. Thank you so much for weighing in. Congressman, I want to get your take on this as we await the CPI number. We did see oil prices come in a bit, and that took some of these inflation numbers down. Are you expecting inflation has peaked?
I'm not sure it's peaked. Let's face it, oil and groceries, those are kind of volatile numbers that are going to fluctuate quite often and have a big impact on the inflation rate. But it's the core numbers that I think that hold the key of inflation itself. So that's what I'm looking for. I suspect, it may tick down a couple of points or a couple of percentage points, but not much, a couple of tenths of a percentage point.
Tomas, the head of the IMF, Georgieva, says that recession risks for many countries are rising. She's out this morning at the IMF meeting saying that she's appealing to policymakers to act with a sense of urgency. It feels like the central banks are the only ones rowing the boat here because the federal response has been just more spending. How do you see it?
Well, I think a lot of Main Street is kind of...
Go ahead, Tomas.
Sorry. I think a lot of Main Street is sort of could care less about these recession debates, essentially, because what really matters for them is real income, that their paycheck can't buy as much as it did a year and a half ago, essentially. And that has been going on for a long time, with whatever you're calling this downturn. In fact, it's been kind of a very heterogeneous effect on our population. If you look at the elderly, they're sitting on Social Security, which has not been indexed yet, and they have taken, an 8% cost of living decline this last year. So for them, talking about a soft landing is kind of ridiculous. They basically crashed with their face down already. They will, however, see an uptick because as of today, now, this is the last inflation number coming out in the third quarter, and that determines the index in Social Security, which will be huge, the largest in a very long time of 8.5%, it's predicted.
Yeah, that's a great point.
And that is going to basically lift... Yeah, that's going to lift them this coming year, probably above inflation.
Yeah.
So they will see real incomes increase, but they've seen a huge dive already.
Yeah, of course, because of the inflation numbers. Dagan, we're 4 minutes away from the number. Assess where we are. What's most important?
It's what Tom is talking about, and this came from the Federal Reserve Bank of Dallas last week, where the median decline in real wages, inflation-adjusted wages, is more than 8.5%. for workers in this country. And the American people know it's not just the ultimately it was the runaway monetary policy, but also the continued fiscal policy from government. And it's not just in the United States, but let's focus on the Biden administration and the states, where states are taking the money from the $2 trillion in the spending bill last year and spending it now and handing it out to people in states across the country. Like, their rebates have gone out in at least 19 states so far this year. And that is inflationary. That is stimulus, whether you call it a tax rebate or a gas rebate or inflation help. It is stimulus. And so these central banks and the Federal Reserve are having to fight against that. And it's making the job of the Fed that much harder. And in terms of people understanding what is going on, Yellow Motor Steel Hauler is a small business trucker on Twitter and said, you guys are talking about inflation, and this is what professional analysts don't understand and why it's still soaring. My company is adding 40% to every freight bill, And until energy costs are under control, inflation is going to remain high.
Yeah.
So these workers, these business owners and operators understand something that the eggheads at the central banks don't. And certainly, with no offense to Buddy Carter, these grifters in Congress don't understand either.
Well, I'm speaking of eggheads. We're waiting on a CPI that's expected to be up 8.1%, but the things that we buy are up much more than that. I know I point this out all the time, Mark. A dozen eggs is up 40% in price year over year.
That is crazy. So, as I'm kind of going through this report, I like to get pretty granular with it, look at it line item by line item. For me, the most important stuff are the essentials, because inflation, again, is disproportionately impacting lower and middle income households. So food, shelter, those are the two most important things I'm looking at. And those have been coming in hotter than the headline number. When you look at what's coming in lighter than the headline number, it's all those highly discretionary items like apparel, airfare, TVs. I don't care about that stuff. I care about the essentials, because that is what is hurting Main Street right now.
Yeah, and it looks like used car prices are going to come down. That's one thing that is supposed to be a positive in this report.
Yeah.
Well, core, to your point, core CPI is expected to come in annual year over year at 6.5%. That is back to the March high, the 40-year high.
Right.
So if you look at these core prices, they've been gaining steam. So this idea of like inflation has peaked is, well, nonsense.
Nonsense. Which is what I said months ago, because you don't see any peaking of inflation, even if you have a weaker than expected number this morning, Todd.
This is the final report before the midterms, correct? I cannot believe that if these numbers come in as we all expect, to your point, Mark, the discretionary items, but also the necessity items. People are going to vote with their wallet. It's going to put all the other issues in the background. Republicans are going to be very, very happy, despite the fact that we're going to get some bad numbers in about 20 seconds.
Well, we'll see, because this administration wants to raise taxes as well. Imagine layering on that on top of everything else. You got higher borrowing costs from the Federal Reserve. You got higher prices for everything you're buying, the essentials as you're talking about. And then you're going to face a higher tax bill. The estimate is up 0.2% overall and up 0.5% on core. Let's get right to Cheryl Casoni. She has the numbers on the Consumer Price Index now.
All right, so we're looking at a month-over-month gain of 0.4%. The estimate was 0.2%. Month-over-month coming in at 0.4%. Year-over-year, 8.2%. That is hotter than expected. Again, coming in month over month, hotter than expected at 0.4%. And again, 8.2% is the headline CPI number for the month of September. That is hotter than expected. Again, if you strip out food and energy, 6.6%. That is your core number year over year. Hotter than expected, guys. Hotter than expected. There goes your markets down 241 points right now. All right, let's look at some of the components of this. Okay, so energy, month over month, 2.1% lower. Sure. Gasoline, to Congressman Carter's point, down 4.9%. New vehicle prices month to month, Maria, jumped 0.7%. Housing month to month, jumping 0.7%. Food month to month, jumping 0.8%. Rents month to month jumping 0.8%. I'm trying to find something that fell on this report. You know what? So far, I can't even find it except for energy prices. All right. Real average weekly earnings for the month of September, a loss of 0.1%. Again, going back to energy prices, though, again, we did see a little bit of a fall. Not a surprise when you're talking about what you're seeing with regards to energy price and oil. By the way, I am getting continuing claims, 1.368 million. That actually rose, guys. I just want to say that is crossing right now. And as for jobless claims, that came in as well. Jobless claims coming in. Hold on, guys. 228,000. Hold on. 228,000. So again, let me go through some of these numbers one more time. I'm going to dig into the report, give you a sense of what we're seeing. But again, all of these numbers are hotter than expected. To recap, and then I'm going to dig into the report. A gain of 0.4% 6.4% month to month. Year over year, a gain of 8.2%. Year over year, the expectation was 8.1, hotter than expected. Core month over month, 0.6%, hotter than expected. We were looking for 0.5%. Core year over year, 6.6%. Again, hotter than expected. To Dagan's point about that core number, this is now a new annual high, Dagan, for that core number year over year. Remember, she mentioned March that we came in at 6.5%. That was the hottest number we had seen for the year for 2022 for core. That now has come in with a new high for this year. And inflation watchers across the board are not going to be happy about any of that. Again, look at the markets. Dow down 337 points. I'm going to dig a little bit more into this and give you some further numbers, Maria. I'm going to send it back to you guys for a reaction. But again, those are the headline numbers. And a tiny, tiny loss on used cars and trucks, Maria. You were talking about that 1.1%, but still 7.2% year over year. Yeah. Sending it back to you guys.
It's not enough to actually offset anything, even though used car prices are down. Highest number on inflation since 1982. Bob Dahl, let's get your reaction first.
Obviously not good news, and too many of the important things, food, shelter, up almost a 10% annualized rate for the month over month. Not a good number like yesterday's PPI. Market's not going to like it, and Fed's got a lot of work to do. Any notion of pivoting that we talked about before the number came out, not going to happen with these kind of numbers, Maria.
I mean, you've got a market that has completely sold off. Dow Industrial's down 300. We were up 300 on the news out of the UK. Buddy Carter, you nailed it. Inflation is not peaking, has not peaked. Question now for you and your colleagues, are you going to be able to stop this agenda should you get the majority in November? What can you really do, even though you've got Joe Biden in the White House with his executive order pen?
What we can do is to stop the spending. That is the first thing we've got to do. You know, I get so irritated with the states, with all due respect to the states. I mean, they're out there claiming, hey, look, we balance our budget. We've got a surplus of $9 billion. We're sending you money back. Yeah, where'd you get that money from? From the federal government. You know, Maria, I made a mistake the other day at a town hall meeting, and I said the federal government spends like drunken sailors. And a sailor jumped up and he said, wait just a minute now. I was a drunken sailor, and when I ran out of money, I quit drinking. We don't quit drinking. We just keep printing money. That's the problem.
Yeah, it's true. Mark Chipper, I want to get your take on this, but I also want to say Dagan's been going through all of the inflationary moves that this administration has gone. Dagan, I want to add to your list because another addition to that is a 24% raise for the rail workers. Okay, this so-called imaginary tentative deal. He dangled a 24% raise in front of them. They still said no. If you have a 24% raise for one union, what do you think other unions are going to do? Expect strikes after the midterm elections, David.
Right, that's the inflation price spiral that is so dangerous. But to Buddy Carter's point, you need to call out people on both sides of the aisle, Congressman, because this is Republican and this is a Democrat initiative at the state level. And you see it not just here in the United States. They're trying to help people with inflation by sending out stimulus. It is completely upside down in terms of the policy that we need in this country, but then also overseas. There's the talk, Maria's been mentioning it all morning, that the Prime Minister, Liz Truss, is going to back off on the tax cuts, but they've also promised in Britain and elsewhere to cap people's energy bills. That's stimulus, and it doesn't help people rein in demand. And so it makes the job of the central banks that much harder. But watching these markets are down now 400 points. They're all over the place because money is going to get more expensive. And the investors have not woken up to the fact that these central banks are not going to be there at their beck and call to rescue speculators, gamblers, and investors.
Well, I'd like to see some. I'd like to see some acknowledgement by this administration. Todd, you nailed it earlier when you said, when you talked about the Inflation Reduction Act. The Inflation Reduction Act is only stoking more inflation. So it should, again, lies with the name of this act.
And that leads to my question for the congressman here. In light of these numbers, which are the numerical proof of what we are all feeling, we know this intrinsically in our hearts, in our minds, in our bodies, in our wallets. Is this the final death knell in the Democrats' coffin if they want to keep Congress, both the House and the Senate?
If the media reports it, maybe.
Okay.
Yes, I couldn't agree more. Look, inflation was at 1.4% when Joe Biden took office. Now it's at 8.2%, almost half a century high. And yet in July of 21, Joe Biden said, oh, inflation's just temporary. Yeah, well, Joe, it's not temporary. It's here to stay. And we've got a big problem. Yes, the Federal Reserve, they were slow to the dance. They should have been reacting much sooner than they did. But they're going to go up on rates again. And yes, this is going to have a big impact on midterm elections because people vote with their pocketbooks.
Mark.
All right, Maria, I've had a chance to kind of go through the data line item by line item. Obviously, just about everything is up. The things that I'm seeing that are down: apparel, appliances, footwear, bicycles. Fortunately, I'm going to the ball game later tonight, so sporting tickets have come down, and the beer I'm going to have at the ball game.
You're not
later.
going to the game. It's going to be rained out, but continue.
Come on, buddy. Don't do that to me. The one good thing, though, we've been talking about eggs. Eggs down 3.5% month over month.
Okay.
That's the one silver lining there. Okay. But other than that, a complete disaster.
Yeah.
Complete disaster.
Look, the core is what people are focused on. And Tomas, when you look at this core number of 6.6% year over year, what does that tell you about where things are going and how the Fed views this?
Yeah, I think the core actually is the same as month to month as last month, but the headline is 4 times larger than last month, which is really worrisome, obviously. I think this, the Fed has one more reading of PCE, October 28th, before their November 2nd meeting, but this could flare up quite dramatically if PCE is also as hot as CPI was today. And I think, Maria, coming back to your point, if the press covers that, if PCE comes in really hot before the November 2nd meeting of the Fed, just 6 days before the election, that's going to be something that voters pay attention to, given the number one issue in the election, it seems to be inflation.
We'll see. Cheryl, you've got more on the core.
We're talking so much about the core, and that's what I want to go into here, because they give us the breakdown of where the strength really was, unfortunately. If you look underneath core, shelter, things that medical care, motor vehicle insurance, they mentioned new vehicles, household furnishings, and also, and this is not normal, I'm seeing education is listed in this as well. And then if you go down to the food issue, those year-over-year numbers, I think, is what is still so surprising to me. If you look at food at home, and that's what most Americans are dealing with on a day-to-day basis, that year-over-year jump is still 13%, and the month-to-month jump for food at home was 0.7%. And then food away from home, those numbers also really hot, 8.5% year over year and 0.9% month to month. So again, it's the basic necessities. And while we're seeing a little bit of a drop in the fuel, the energy costs, we expected that because of crude oil prices for the month. I just want to remind everybody, for next month, we're seeing oil now ticking up. Right? We've been pushing $90 a barrel the last couple of sessions, Maria. So this data is from the first 3 months of September. And I realize this will be after the midterms when we get the next report, but that's going to also be reflected. So inflation is not going away anytime soon. And again, to Dagan's point, again, that new hit on core, that new annual core number, pretty disturbing for the American people, folks.
Todd, you've got rates moving higher. The 2-year now is at a 15-year high. Markets expecting another 75 basis point hike November 1st and 2nd, Todd.
Yeah, just to chime in on Cheryl's point on energy, September is the most temperate month out there, maybe with the exception of April. People are no longer doing their summer driving season thing. They're back to school. They're driving in moderate amounts. And let's face it as well, October, we've seen the numbers skyrocket already in terms of gas prices, and it's starting to get cold in the Northeast. When people start needing that home heating oil, those numbers are going to be bad. Bob, speaking of the winter, I have a question for you, sir. This is the last CPI before November, but Also before people really start thinking about the holiday shopping season. I went into Home Depot last week. I saw trees. I heard music. In light of these numbers, will the holiday shopping season save us, or, Bob, will it disappoint so much that it will prolong the recession and really depress the markets?
The good news is consumers have a lot of cash on their balance sheets. They may choose to spend some of it for Christmas, but you point out the bad news, which probably overshadows, and that is they not only see costs moving up, but now they're worried that they're going to continue to move up. The longer this inflation stays hot, the more it becomes inundated, inculcated in the system, and then it prolongs things, and you get that spiral that's not very healthy. The Fed's job's just gotten a notch harder.
Bob, I disagree with the healthy balance sheets. We just saw the second largest increase in credit card borrowing on record, according to Stephanie Pomboy. Even with credit card,
cash is up more. They have $1.5 trillion of excess savings from the pandemic
that they spent down. Because why otherwise would people be borrowing on their credit cards at 18% rates when rates are climbing on their credit cards? That's where the money is going. And part of the problem is that if you have a consumer still buying, and you have seen that somewhat, but an employer that's skittish and starts cutting headcount, that actually hurts supply. You don't want to see the slowdown on the supply side initially, and businesses pulling back and not consumers, because that actually fuels inflation. That where you have like supplies diminish, but people still out there shopping. The IMF has made this very clear, and you're even hearing this from, say, Jason Furman about the Fed and central banks needing to stay the course. The IMF said policymakers should heed the lessons of the past. That was a quote from a report that came out a couple of days ago.
Lagarde was saying that yesterday.
Right. The period in the 1970s where the Federal Reserve and the central banks were raising aggressively, but then they came under pressure from Congress and the public. They reversed course prematurely for fear of inflicting more pain, but it's pain that people need to experience, like it or not. And Jason Furman, we've got the Fed funds rate at 3.25 right now. Jason Furman wrote last week that the process that the Fed should not let up on could easily take the federal funds rate above 5% next year.
Wow. To your point, can I jump in here? We're looking at Fed funds futures, 99.7% jump. Exactly what you're talking about for that 75 basis point hike at the next meeting. That was 86% going into the CPI report day.
That's only going to take the Fed funds rate to 4%.
Yeah.
We're talking about 5 or north of 5 with inflation. The top line inflation number is picking up steam.
Yeah. Is this the right response from markets, Bob? The Dow Industrial is now down 481, Bob. We're talking about a 700-point whiplash move here. We were up 300. Now we're down almost 500. Is this the right move? Sell this market?
Sadly, yes. Bear markets don't end until the interest rate from the Fed gets higher than the inflation rate. So rates have to go up a much more, as we've just discussed, and or inflation has to come down. We're not bringing inflation down so far, and so the Fed funds, everybody's thinking 4 and a fraction. Maybe it's 5 and a fraction. Maybe it's 6. They have a lot of work to do yet.
Mark.
Yeah, so as of this morning, the terminal Fed funds rate, according to the Fed Fund Futures, was 4.63%. Right now it's 4.83%. So essentially, an entire additional hike is now being priced in. We're all talking about how it's very likely that it could go above 5%. Cheryl asked me to pull up the dollar index while we were in break. Wow. I mean, that thing has gone straight vertical, straight up. It was down this morning on the UK news and pound strength. It has undone all of those losses and then some. I mean, it went straight up.
And the 10-year is back above 4% right now as the Dow Industrial sells off more than 500. Dagan, as we see these rates move higher, that's cutting into profits. That's cutting into people's ability. I mean, you're talking about a whole population living paycheck to paycheck at this point.
I can say yes, absolutely. I can say that watching this 10-year Treasury yield, if it stays above this level, the last time it got to this point, there was a rush of buying. into longer-term treasuries for a number of reasons. But that 4%, if you think that inflation is going to come down, if the Fed will get aggressive enough, if you buy and hold 10 years and can collect 4% a year, that looks like a decent return for somebody looking for some level of safety. So you might see, as the day wears on, where the futures are down more than 500 points right now on the Dow futures, if you get some buying activity in the 10-year and that starts to come down, you could see a reversal in the stock market. That potentially.
Well,
the day moves.
Longer term, we're talking about a recessionary environment. We're talking about contraction and this inflation not only cutting into profits, but wages. Buddy Carter, your thoughts on wages and how anybody's going to get ahead of this when you've got wages rising, 4 or 5% and inflation up 8.25%. You don't have a raise that you thought you had if you're spending more money than you're making.
Absolutely, and that's the problem. The average American with inflation at 8.5% or 8.3%, they've lost 1 month's paycheck, and they are hurting. And you know, the core numbers are important. We all understand that, and yes, they are going up, and I think that's an indication that inflation's here for a while. But when I'm in the district and I'm traveling, people are concerned. How are they going to buy gas? How are they going to buy groceries? How are they going to pay rent? We need to keep in mind about the housing and the rental market here. That is really impacting people more so now than I think it has in the past few months, in the past 6 months.
Yeah.
Now they're really beginning to hurt. Those are the issues that we are trying to deal with in the district. That's what I'm hearing from people.
Well, this is why he's telling everybody to
wait.
wait. This is why he's telling everybody to wait till after the midterm elections. Don't let anybody know there's really no tentative deal with rails. Don't let anybody know that you're going to cut back on production, Saudi. Do it after the midterm elections because it's all about power.
Yeah, but that red is sort of telling people that things aren't good.
Yeah, go ahead, Todd.
Bob, if I could bring you back in here. You said in my answer to my Christmas question, people are sitting on a lot of cash. Presumably that means companies are sitting on a lot of cash as well. My big question, what do I do now if I am a common investor? Again, I always say I'm the news guy. I'm not the business guy. I'm just an ordinary guy. Do I look to dividend stocks in light of the fact that all these companies are sitting on these cash? Obviously, I'm not going to start buying growth stocks. There's not going to be growth between now and the end of the year because obviously the inflation numbers are horrible. Again, do I buy these dividend stocks or are these companies going to take that cash and do stock buybacks?
Dividends, dividend growth, quality of the income statement, the balance sheet, the management, predictability of earnings. You just need to be hunkered down in this environment, and the stocks you own, you have to have pretty high confidence in. The flyers, that'll come later.
Well, what about those companies that have pricing power? Mark, look, we're talking about food, shelter, all up. The essentials are higher. There must be pricing power in this market for some, Bob. Let me get Bob and then your take on what we're seeing in terms of the companies who are operating well in a 40-year high inflationary backdrop.
For sure. There are those companies. We talked about PepsiCo a minute ago, had a great quarter on price increases. There are a bunch of companies out there. The question will become how long will consumers be willing to pay the higher prices before they go on strike. Necessities, of course, they'll keep buying. They'll have to. But there's a limit to how much companies can raise prices. As we saw in the car markets, the volumes came down because prices got too high. We'll eventually get there with other products, too.
Mark.
Yeah. So, I mean, look, whenever you're in an inflationary environment, you want to invest in companies that have strong pricing power, that have strong margins. So that's where you want to be. But to kind of go back to Todd's question about should you invest in dividend paying stocks, where should you go right now? I got to tell you, laddering treasuries right now, I know it's not sexy, but a 3-month, 6-month, 1 year, 2 year, that doesn't sound all that bad. 4.4% on a 1-year treasury right now. Like, it's not a bad place to hide out. Assuming you're willing to hold to maturity, not a bad place to hide out.
You're looking at an incredibly deep, long-lasting recession on any part of the economy that is sensitive to interest rates. And we have just begun to see what's going on in housing with the mortgage rates hitting a new, we get them from Freddie Mac later this morning, but the mortgage rates at a new 16-year high.
Almost 7%.
And so you're just beginning to see the cracks in the housing market. This is caused by a different reason, really a bubble, another housing bubble caused by the Federal Reserve, and a come down because the Fed giveth and now the Fed taketh away and taketh away some more. But you are going to see a very serious housing collapse in this country. And right now it is unavoidable. So virtually almost every sector of the stock market has been shellacked and is going to get shellacked again and again and again for the coming year.
It's going to take years to get us out of where this administration has put this country.
The administration,
and Maria,
sorry, I didn't mean to interrupt. Go ahead.
No, go ahead.
I was going to say,
Maria, if I could just add this. If I could just add this, there is a danger here, and that danger is as the Fed continues to go up on interest rates, and they are going to continue to go up, think about what it's doing to our national debt our interest on our national debt. Every percentage point increases at $400 billion. We have got $31 trillion in debt right now. As the interest rate goes up, the interest on our debt skyrockets. And that is going to cause us problems for years to come. And we are digging such a deep hole here.
And like I said, I think it's going to take several years to get us out of this digging.
A decade, maybe. Joe Biden and company have done to this economy with inflation what it took LBJ. They did in a year and a half. It took LBJ and Richard Nixon and their respective Federal Reserve chiefs 7 years to take us to 8% plus inflation. And it was because the central banks refused to stay on an aggressive course to fix that inflation that it lasted for a decade. But it's astonishing the speed with which this economy and really the global economy, these are central banks and governments around the globe that have done a lot of this, that we've entered this downward spiral. And it's going to take a completely different mindset among politicians to fix it.
Todd, what is that saying? It's a recession when your neighbor loses their job. It's a depression when you lose your job. We're going to focus on the jobs numbers because there is no way you can generate hundreds of thousands of jobs in an economy where you've got 2 straight quarters of contraction and an inflation number that's at 40-year highs.
And obviously ignore what's going to happen in November and December because that's the holiday season and those numbers are skewed anyway. Joe Biden earlier this week on that CNN interview said nobody has done more this soon in a presidency than him.
I think
he's right because think about how much he has destroyed our economy. That takes some effort. The proof is in the pudding. You're seeing a lot of red on your screen today.
I'm so glad you brought that up because that soundbite bothered me so much because it was more lies saying, look what I've done. What he's done, I think he was talking to the progressives. What he's done was, do what Alexandria Ocasio-Cortez wanted him to. He has not done anything for the American people other than making life harder and more expensive.
But it's always about him. And you mentioned the comment earlier today that he made on the hot mic, nobody F's with a Biden. The president you want in office would say nobody F's with America. But it is constantly about him. It's me, 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 me. Look at what I did. Look at how great I am. No, man, you're actually not doing a good job at all. You are hurting the people that you claim you are trying to protect. You're hurting them more than, the uber wealthy or the tax the rich people that you don't like.
Can I ask Tom a question?
Go ahead.
Tom, does the central bank, does Jay Powell have the stones to stay course?
Yeah, I think he's, they're burned from being so late in the game, obviously, and all of them are talking in tune, it seems to me, as being very, very hawkish. So I think they're going to, I don't know if they're going to stay the course, but they're certainly going to go up. Everyone expects them to go up, and the question is how long they stay. The sad part of this is that this market is now completely Fed-driven in some sense. We have people allocating capital, and all they're concerned with is how bureaucrats in D.C. are timing their price controls in credit markets, as opposed to being concerned with which companies serve their customer best and deserves capital. I think it's so sad in some sense that now with the full focus of obsession with capital markets is on bureaucracy.
Maria, can I jump in real quick? 1 in 10 chance we get a 1% jump in the November meeting. That was at 0 going into this report 25 minutes ago. There's now a 1 in 10 chance we're going to get a full percentage point jump from the Fed.
To Tom's, exactly what you said, Tom, the Journal, Hardeep Singh in the Journal today has an article saying that stocks move in lockstep as Fed's rate increases show no mercy. The S&P 500's 1 month realized correlation has climbed to the highest since March of 2020. That is the only thing that matters is what the federal, well, as you said, the bureaucrats too, and what they might do. I write on every article I print out policy mistake, because that is exactly what is happening in Congress.
There are a lot of them.
Yeah, there was a piece in the Wall Street Journal about the policy mistakes that will come out. The Democrats' ideas for revenge would hurt the U.S. economy on they're trying to figure out how to punish the Saudis on oil prices. That's going to be another, price controls.
Yeah. Well, don't forget about the energy policy.
Windfall profits taxes.
Oh, yes.
Trying to go after. Let's talk about the proposed
the
embargo.
bottom.
Go ahead, Tom.
Yeah, the bottom line is essentially that the Biden administration is doing pretty much the exact opposite of what we were trying to do. And what you see is the exact opposite result. So I think that's the big picture to keep in mind here is that, everything that we try to accomplish is being torn apart.
Right.
And as a consequence, all the results we accomplished are also being torn apart.
And business is taking notice. The other day, it was Jamie Dimon, the CEO of J.P. Morgan, who basically said that Biden is getting the energy policy completely wrong. Buddy Carter, you've talked about this a lot in terms of this bullying nature out of this administration to go climate change agenda, or you're going to face consequences.
Absolutely. And look, you can't convince me that this is not calculated. This president, this party, the Democratic Party, they want a socialist nation. That's why I honestly feel like they are trying to bankrupt our country so that they can reestablish us as a socialist country and push their Green New Deal. The Inflation Acceleration Act, as I call it, that is ridiculous. That was so unnecessary. It poured fuel on the fire. It's not what we need. When I'm in the district, people are telling me I'm having trouble buying gas, I'm having trouble buying groceries, I'm having trouble paying rent. That's what leads me to believe that we're going to have an even bigger turnout and an even bigger majority in the House this year with Republicans than I even imagined before.
Yeah, so they're trying to distract and come up with other things to talk about, Todd, like abortion, as if abortion is the #1 issue on the American families' minds right now.
My money guys tell me that they are excited for a Republican win in Congress because they say if that happens, a lot of these losses are going to be paired and could turn into wins.
We will leave it there. Congressman Earl, Buddy Carter, Bob Dahl, Tomas, Philipson, Dagan McDowell, Mark Tepper, Todd Pyro, Cheryl Casoni. Great to have you all and great to talk it out with you. Markets down near the lows, down 455 on the Dow. Stay with Fox Business. Here's Varney and Company. Stu, take it away.